Hi, this is Mark with your analysis for the week commencing the 20th of March. In last Sunday's video, I was showing you how, following the 1995 earthquake in Japan, that the actual value of the yen in the following months actually increased 2,000 and odd pips. And what I explained to you was that, in my opinion, the current situation was and is untradeable from a technical perspective. And the reason being is that we had the ongoing problem of aftershocks, we had the problem of the nuclear power plant potentially likely to leak radiation, etc. There was too much going on. This is a scenario, as I said, that showed in 95. By the end of the year, prices actually come back and gone the other way. So we would expect to see some kind of movement similar to this over the coming months. Last week, it was here on the Sunday when I said to leave this alone. What happened? We had a major spike upwards in the value of the Japanese yen against all the major currencies. This seems illogical to most of us because there is the cost of the earthquake. The flip side is the theory goes that the Japanese investors will be withdrawing their money back to Japan, and also for future unemployment will be low because there's going to be massive job creation in rebuilding, etc., etc. But in many ways it does seem illogical. However, we got the move. It was a huge move, and some of you no doubt were fortunate and caught this. What did it do? On Wednesday it closed way outside the Bollinger Band, and therefore you know that there's a very good chance it's going to at least return to the bands. And Thursday, Friday, the G7 group of nations agreed to intervene in this currency at the request of the Bank of Japan. It's the first time that G7 group have intervened in the currency market since the year 2000, and it was all to prevent the yen getting too strong. If it gets too strong, it will kill Japan's export markets, and exports are their main form of income. So it's very complicated. The significant part for me was we actually ended up back where we began at the beginning of the week, and 8200 has been the major area of support and resistance, and it may well be that if it comes back down again, this is the point to which it keeps returning. It's a very expensive exercise to intervene, and it can't go on forever, but it technically means how can we predict what it's going to do next when it's all over the place and there are so many things going on that we do not know. To further make things difficult, tomorrow is a Japanese bank holiday. I personally will not touch these pairs, any of these Japanese pairs, and I strongly recommend you don't, but particularly on a bank holiday. One of the bank holidays back end of last year, we had 20 odd pips worth of movement in the day. During the week, there is a lot of news as well on other pairs. We have ECB President Trichet speaks tomorrow. We have a big EEC conference. Bernanke speaks this week. There's big news. There's British pound. There's a heck of a lot going on. I have been trading Forex now for 7 years, and these are incredibly volatile and difficult markets to predict. Everybody now, because the Japanese situation has forgotten about what's going on in Libya and in the Middle East. That situation is not going to go away either. This is the Euro USD. Now the Euro USD, I suspected was actually going to turn back down at 140. What I'd said to you, this is on a weekly chart, and what I said to you is if it breaks through this upper trend line on a weekly, then we will be looking for a pullback. Last week on the Friday, so on the weekend, I was saying here, look for a short at 140, which we got. And we got a nice move down, and where did it stop? To the pip on this previous support and resistance line. So those of you who have been with me for a while know you will be looking in terms of longing here, shorting here, and it would have won once, twice, 3 times. Finally, it's broken through on the Thursday, and on Friday we've got a major pull through. Now, there's not a right lot of logic in this to me because the situation in Europe has not changed. Read the Irish problem, the Portuguese banks, the Spanish banks, etc. But technically now we have a breakout. What do we do for a breakout? We look for a pullback. You will have to play carefully with all the news and say Trichet speaks again tomorrow, and he's quite capable of moving the markets, and I think secretly enjoys doing it. So you have to watch this space carefully. But a trend line break is we then look for a pullback. So you will be looking for a pullback to around 1.4030 area, because that's where the trend line was. That's where previous resistance was. breakout, pullback, off we go. The Bollinger Band tomorrow will continue rather here, so we will expect to get at least some pullback. But there's always a possibility in current markets it just plummets back down again. But 140, 140.30 is the huge area. Bear in mind that a recent double top back to the weekly is only here at 4,300. So again, you have to watch very carefully. Personally, I wouldn't look to short here, but that's the major area. If we get through there, then the euro could be back on its way back up to 150. So this will be the crucial area, and this will be the crucial area. And the final option, of course, if it does go back below 140, then you look for a break, a pull back to 140, and then for a short. There's a pound dollar on a weekly. Pound dollar did it again this week. I suspected during the week this was actually going to break 160. It didn't. And you could again have been taking trades simply in recent weeks, longing at 160. Here, 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 and shorting at 163 area. And this, until it breaks this way or that way, then these are the two areas to be considering. This is the pound dollar on the daily. And as I say, you can see here, every time it's slammed into the huge psychological level of 160, it's bounced back up again. I missed a trade, beautiful trade on here the other day, but a couple of pips, and it happens, unfortunately. But these are the areas, and again, for me, potential shorts back down around 63.30 area, and certainly I will be interested to long. If it does finally break through here, then no great loss. We then look for a potential short back down to the 158.00 area. This is the euro pound. This is the euro pound on a monthly. So at the end of the week, we will be looking, or certainly the week after, this could well be a triangle breakout. And the theory of your triangle breakout is that this particular pair could move 1,800 pips. And if it breaks and closes this way, then that will be 1,800 pips in this direction, which takes it up above the recent high and really starts to get up to 1-to-1. So we're going to have to wait on the monthly for price to break and close outside this area and then look for a pullback. On a weekly basis, last week we were looking for a potential short at 8,700, and on the Monday we got it. We got a very nice trade here, and I know a lot of you caught this for 60 odd pips overall movement. Then you were able, it trickled around this area. Friday it's broken out. Now what we were looking at last week, we were looking at this Bollinger Band. And I'd shown you why there were multiple reasons to look for a short here unless this Bollinger then burst open, which it has done. So this is now open and wide. This is the weekly. It will go here tomorrow. So tomorrow you would expect a pullback at least to 8,700 to the Bollinger Band with a view for a potential long, or 87.20 at this point. My main area now is we've broken the 61.8. If you're considering this now to be a long, the main area to consider is a long at 8,700 with your stop just below the recent lows down here. This is the dollar Swissy. We are at all-time lows, unknown territory here. Wednesday it closed clearly through the Bollinger and it came back up and touched it and waited for it. I'm not going to touch this now. It's too extreme for me. If it comes back up, I was looking the other day for all the way back up here, and really this is the main area. If the dollar Swissy starts to turn up, then obviously the euro USD will turn back down. Aussie dollar, I was looking to long here. I had a lot of winning trades in recent weeks, longing simply at 100.20. On Tuesday it simply piled straight through and kept on going. Strange times, these are strange times. Technically now I was saying to you during the week, you look for a pullback back up to the 100 for a potential short. Didn't quite get there. 100.20 is the main area again. This once again is very, very messy. Not the favourite pair at the moment, and equally the CAD. The CAD is nicknamed the Looney. Drives you insane sometimes. Looking for potential shorts down here. 9800 went straight through it. Where did it stop? It stopped up around 1,000, which is the huge psych level. If it gets up here again in the next couple of days, yes, I would be interested to short. My best advice for this week is watch the news announcements carefully. We have, on every day of the week, we have some major news for one of the pairs, and particularly we've got the pound MPC meeting minutes and Bernanke speaking, retail sales USA. There's a lot going on, so you need to take this day by day. I will update you tomorrow. My best advice is only being one trade at a time and trade carefully. Very, very unusual markets. Have a great week.